Hello, this is Joe Pryor, the Virtual Real Estate Team, where we specialize in residential investment property in the Oklahoma City and the Tulsa markets. I always try to do, at least weekly if I can, an update on interest rates. And it's still the roller coaster that you could possibly expect. So this is a problem, trying to time the market in terms of doing that. I will tell you, in my almost 36 years of experience, that rates will go up faster than they go down. And a lot of times things are economics. And right now, we have the most volatile situation I have seen in my 36 years because we don't know what's happening from the federal government. We don't know if tariffs are on, tariffs are off. We don't know about any economic policies. There doesn't seem to be a plan. There's a lot of talking. It changes sometimes daily. And so the market is trying to gauge what the heck is going on. But the good news is lately we trade in a very, very narrow range. Now, economic news comes out. So for instance, the jobs report just came out and it was better than expected. And that's a good thing. I'm not trying to say, oh darn, I wish we had more unemployment, but that is about to happen also. So you got to understand these markets are going to change a little bit, up and down on their rates. And so just recently that has caused the rates to go up, but just previously to that, with the hope that these tariffs, like on China, are going to go away or not going to be as draconian as we thought they were going to be, then the bond market reacted positively. So if you're trying to really gauge the rates, you're going to have a really, really tough time. I know that I am. So right now, it's gone anywhere from a low let's say in the last 30 days, for an investor with 25% down with some points paid, we got as low as 5.75, but we also have been as high as 6.375. Today, it's at 6.125. New news is coming out. We know that there's some unemployment coming. We know that UPS is laying off 20,000 people because Amazon's not shipping as much stuff as they were. And so these things are going to affect the market again. But roughly, it looks to me that we're going to stay around that 6%. Now, the good news in Oklahoma City and Tulsa is we have positive cash flow properties at around this plus or minus 6% rate. So that's exciting news for us. We wanted to go lower. Obviously, we wanted to go lower. But right now, it's in that trading range. It hadn't changed a tremendous amount, about a half a point up and down. It changes very, very quickly. You need to keep the pulse on this because you're going to have about a 45 to 60 day interest lock period with your lender. And so you want to go and not necessarily go, well, I think I'll wait if the rate is acceptable. Because, it may very well go up. Remember what I said at the first of this video. Rates go up faster than they go down. So don't kick yourself. And here's the deal. 2 years down the road, if rates go way down, it's a very simple thing to do is to refinance your property on another 30-year note. Your rates have gone, or your value has gone up in your house. You can pretty well do this for zero out of pocket. So don't worry about it, but don't try to time the market to think that it's going to go down if the rates are acceptable to you. Lock in, get a guarantee. I think you're going to be fine.